joining us today. Welcome to another SARE National Session. I'm Jasmine Sadri, and I'm going to be here as your host and moderator for today. And our topic today is walking through completing an application and personal financial statement. And our guest is Tim Coates. This is part 2 in a series. If you are keeping up and joined us for the previous one, this is part 2. I'd like to tell you about our speaker today, by the way. This is actually, like I said, Tim's second session in a row. You can watch his first session on SARE's Nationals, on SARE Nationals YouTube channel. He does share an incredible wealth of knowledge that you will absolutely gain so much from. I know I have, because I've been watching your stuff, Tim. So let's get started by getting just a little familiar with Tim if you have not already. Now, Tim is the Director of Community Outreach and Small Business Lending for Prosperity Bank. He provides small business financial literacy programs to our communities in Texas and Oklahoma. Hello to all of you guys joining from both Texas and Oklahoma. I'm from Texas, so shout out, okay? My goodness, Tim, there's so much about you. I kind of felt worse about myself reading your bio. So, Tim, do the numbers here. He's had over 20 years of experience in the financial services industry. He's had over 16 years of banking experience, over 6 of commercial lending, including SBA lending, and over 4 in small business lending, training, and educating small business owners through his Prosperity Bank Business Masterclass program that's partnered with SCORE. My goodness, we could be here all day for the entire session if we talked about Tim, which I could gladly do. Now that we know a little bit about you, though, Tim, I'm going to put myself on mute and watch your presentation along with all of you guys. Remember, take notes. I know I am. He's a wealth of knowledge that you're just really going to want to take away and remember and kind of go back to and refer, especially if you want to ask questions in our chat. And as a reminder, like I said, if you have any questions as he is going, please post them in our chat. We'll get to them answered as best as possible. And I'm going to unmute myself now and take it away, Tim.
So this is the application. So again, as Jasmine said, my name is Tim Coates, and I'm the Director of Community Outreach and Small Business Lending for Prosperity Bank. If y'all are all available for part 1, we covered a lot of things, but we covered part of it was required documentation. So of the required documentation, when we went into details, we were talking about make sure there's a business application that you have to complete and a personal financial statement. And that you need to make sure that is completed, correctly and accurately and completely. Because that's your initial look to the lender. It's a big deal. And that's how we actually look at included in your whole loan package, right? So it tells us a whole lot about what your ask is and about your business. So let's just kind of dive into the business credit application right now. As you can see, the very first question is, what is your primary use? What is the purpose of the loan? Again, if you were a part of part 1 from last week of the presentation I did on the basics of business lending, you always have to have a specific purpose, for your loan request, for your ask, whether it be a loan or a line of credit. So I'm going to go into detail too as well. I'm going to try to cover most of these items and try to go into detail and maybe give some examples where it'll, make a little bit more sense to you. But on the primary purpose or primary use, I give an example. It'd be like if you're trying to buy a commercial building. Let's say you're purchasing a commercial building so you can operate out of. So you would just put right here, type in purchase commercial building so I can operate my business out of. I always like to see, and I know a lot of lenders like to see a little bit more details on that. So you would put purchasing a commercial building that I would like to operate out of, and then put the address of the actual building that you're looking to purchase, because that's going to be our collateral, right? And we're going to have to do an appraisal, all those kind of things on there. And it should be in your purchase agreement or LOI, letter of intent, right? It should be into that. If you're purchasing equipment, then obviously you would just put your purchasing equipment and whatever that equipment is that you're purchasing. I'm purchasing a big spray, big equipment for spray paint or whatever, so I can spray buildings, because that's what I'm in. So it just needs to be specific on that. If it's working capital, that's where it gets a little, you got to really explain a little bit more. So I'm doing, hey, I'm needing to purchase, I need money for working capital. You're not really purchasing anything. I need money for working capital. Working capital is just not enough. You need to explain what specifically you're using the working capital for. I need, working capital because I need to be able to, for payroll. I need working capital for supplies and materials. I need working capital for inventory, or you may need all three. Put all three of them down. I need working capital for payroll, supplies and materials, and inventory. So hopefully that makes sense on the purpose right there. This is really important. The next item would be, your amount that you're requesting. So let's say, for instance, going back to the commercial building example that you're purchasing, we're not looking for the purchase price. We're looking for what is the loan amount going to be. So let's say, for instance, you're purchasing a commercial building is $500,000, right? You're going to put 20% cash injection or capital injection or down payment. 20% of 500,000 obviously is 100,000. So your loan amount, then your request would be 400,000. That would go right there. Hopefully that makes sense. Working capital is typically not, whatever you need is what you're going to be asking for. You're typically not going to be putting money down for working capital unless it's going to be for startup, like a startup business. That may be a little different. But that amount requested right here for working capital would just be whatever you're asking for. Hopefully that makes sense. Going back to the, again, commercial lending, the commercial building purchase, for terms, I think it's pretty self-explanatory in months, in terms of months. So if it's a 10-year term, that'd be 120 months right there. If it's 20 years, 240. If it's a line of credit, since I'm up here, I'm just going to explain this. If you're asking for a line of credit, like let's say it's a working capital line of credit that you're needing for payroll and for supplies and materials, you just put that amount, and then since it's a line of credit, it's a revolving piece of debt, so it's not going to have a term. There's no terms on revolving lines because it's a line of credit. They have maturities, but they don't have terms. So hopefully that makes sense right there to everybody. Type of credit, then you would just check off, are you doing a business line of credit? You would check that off. Is it a term loan? You check that off. We typically don't do a whole lot of these, but they are out there, letters of credit, as a real estate involved. So in that example, again, if you're purchasing a commercial building, right, you got that amount requested. Here, the type of credit you would check off term loan, because it's typically going to be a term loan for a commercial building. And you would check off real estate, because it's real estate and it's a term loan. Now, this application, and I meant to actually tell y'all this a little earlier, this is the Prosperity Bank business loan application. Not everybody's application is going to look exactly like this. It should have a lot of the same questions though on there, very similar questions typically. You may have a little bit less questions, a little bit less detail, or even more questions or more detail. But these are kind of like the main questions that we're covering for almost all lender loan applications. But I'm just using Prosperity Banks as an example. So again, going back to that, if it's a line of credit, then you would just check off business line of credit. If it's an equipment loan, then you would just check off term loan. And then now we go down to the collateral that's being offered. Go down to this next section. If it's equipment, obviously you just check off equipment. And this is the collateral that we're looking at. If it's a business vehicle, you just check off business vehicle. If it's working capital and you're like, man, I don't know exactly what I'm using for collateral. I think I'm probably gonna have to use a lot of my business assets. You would just check off all business assets. So if it's that commercial building, again, that you're purchasing, obviously you don't see real estate in here, right, on any of these options. So you would just check off other, and then I would put commercial real estate, and then put the address actually of the building that you're looking to purchase or that you're using as collateral. Next section. This right here, It should be stuff that you know. It should be your legal business name. The legal business name. What we're looking for is the name that you filed with the, like in Texas, the Secretary of State of Texas. Like you have a corporation or LLC, that's going to be probably either your articles or your certificate of formation. Um, Depending on every state is a little different as far as what they call it and what they use, but it's whatever you file with the state. That's what we're looking for, or the county, right? Like if you're a sole proprietor, I know in the state of Texas, then you can just have an assumed name certificate or DBA papers, whatever that name is on there. That's what you put right here. For the tax ID number, this is not the state sales tax. This is the federal tax ID number. I know that probably sounds like people should know that, but not everybody knows that. So usually you'll get, when you submit your information to the IRS, whether you do it through irs.gov or you have a CPA or tax advisor that helps you with that. Usually you'll get like an IRS confirmation letter that has that federal EIN number or federal tax ID number. That's what we're looking for, that number right there. If you don't have that, like let's say you've been in business for 20 years or whatever, you're like, man, I have no idea where that is. That's been 20 years, right? A lot of times you can see it on your tax return. Right? Hopefully you're filing tax returns, but it should be on your tax returns that show that. And then right here, you see it says other names used by the company, DBA. Let's say, for instance, your main company is an LLC, but you're doing business as, you have a DBA, doing business as an XYZ company, then that's what would go on the DBA, right? And you should have documentation that shows that. Whether that's filed with it should be, typically it's filed with the state, with your DBA, for either an LLC or corporation. Next section would be, this is important. A lot of people just kind of like, just kind of skip over it or whatever, or they just put information in, not thinking about it. But street address, we're looking for physical address, not a PO box. So your PO box would be probably your mailing address if that's where you want your mail to go to. We're looking for a physical address. So let's say, for instance, you're a home-based business, right? But your mail goes to a PO box. You would put your home address here because that's the physical address of the building, of the business. And then whatever you want, wherever you want your mail to go to, like if it's a PO box, then you put the PO box right there on the mailing address. This is really important because it helps with part of the identity of the business, right? It helps us actually be able to know our customer too, along with the legal business name and the EIN number, and to have some verification for verification purposes, but also for the collateral. So if you were involved in the part one conversation that we had last week, collateral is really, really important to lenders, because that's one reason is because that's our secondary form of repayment to minimize our risk. If for some reason you were to go out of business, which nobody wants that to happen, but if for some reason you were to go out of business, then that collateral is our secondary form of repayment. The reason why this address is important, we need to know where the collateral is going to be, right? The collateral that we're putting a lien on. That's why. In case if something were to happen, we know where to come get the collateral from. If that makes sense. We don't want that to happen. Nobody does. You can see here kind of the next section, it says Prosperity Bank account number for auto debit. It's not a requirement for clients to do auto debit or anything like that. A lot of our clients do, but if it's a new customer, obviously that's going to be blank, or we'll put TBD, but you'll put TBD to be determined, right? It's not a requirement or anything like that, but a lot of times, if you want to build a relationship with the bank or with the funding institution, it makes sense to build a complete relationship with them. But that's why that's there. So you may have something with your lending institution. They might not even have this question on either. But that's what that is. Telephone number, the best contact phone number. Fax number. A lot of people don't even have fax numbers anymore, but for those who do, you're welcome to put that in. Primary business contact. A lot of times people get this, I don't know, they get mixed up on this and they put their phone number down or put a phone number down. We're looking for the main contact of the business. So that we, and the reason why we want that is because for your complete loan package, like we have questions, we need to know who can we call to be able to ask questions, um, to be able to put your complete loan package together. We need to know who the main business contact is. And that could be, I mean, it could be two people, but you can just put one person down. Description of the business. This should be very succinct, concise. We don't need a whole story right here. Obviously, you can see it's only one blank uh, line right here. So, if what do you do? What's your business? We're in the medical, we sell medical supplies, something like that. If you're a medical supply company, if you're a lawn care business, lawn care. Very, 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 very succinct in your explanation right there. And then number of employees. How many number of employees do you have? We want to know that because obviously, if you're back up here, right, you're asking for payroll, working capital for payroll, but yet we see you have no employees. That's going to be a question, right? Who are we paying? You. So just make sure this is accurate, right? Type of business. Are you a sole proprietor, C corporation, S corporation, partnership, LLC, nonprofit, LLP? Obviously, if you're not any of those, then what are you? From an other standpoint, you would check off other and then put whatever type of entity you are. Most of the time, it's going to be one of these. Now, if you don't know what type of entity you are, if you have a tax advisor or CPA or tax accountant, they should be able to help you with that. If you look at your tax returns, that may be able to help you too as well. But I would say talk to your CPA or tax advisor if you do not know. Most people should know. Most people do know. You should know what type of entity you are. Business established. When was your business established according to your legal documents? When you filed with when you filed with the Secretary of State of Texas or filed with the Secretary of State of Oklahoma or whatever state that you're in, what is that date when your business was established? And then current owner, typically that's going to be the same, right? But that could be different if you're purchasing an existing business. So let's say you purchase an existing business. That business established date is going to be when we're talking about when you established it. So that would be whatever date you actually legally purchased that business and then current owner since then. Of course, we'll see from documentation because we're going to ask for the tax returns for the, you know, I guess from the previous business owner. We'll see that it's an established business that has been in business for a little while, but um, but that's when you establish the business. A lot of times, people will set up separate entities too to purchase other businesses. So now we get into here. Hopefully, everybody can see my cursor. We call this the meat and potatoes of the loan application right here. And a lot of times, what we'll see is this part is filled out, right? This top section is filled out, and this part right here is left completely blank. Or we may have part of a section filled out and the other part is just completely blank. So what it looks like is, okay, you have no assets, you have no liabilities, and you don't have any income, right? If you don't fill it out, not a good look. Obviously, you're in business. We know there's some numbers that should support these questions right here. If you leave it blank, what it appears is that you either don't. This is what it appears like to the lender. You either don't think this is very important as far as the application to fill out, or you don't understand how to fill it out. If you don't understand how to fill it out, again, I think I said this in part one, get that mentor, get that tax advisor or CPA or tax accountant or somebody that you trust to be able to help you fill this out. From lenders cannot help you fill this out, right? Now they can answer questions if you have questions, but they can't fill this out for you, right? Since they're the lender. So you have to either have a mentor or a CPA or tax advisor, or have somebody that understands if you don't understand what you're looking at to help you fill this out. I would encourage you to do that. But this is really important, this section here. So business cash assets, bank name. So business cash asset, do you have a checking, savings, or checking, savings, and CD, right? Out of all, and this is all under the business name, out of all your business bank accounts, whether it be a checking account, savings account, CD, out of all different banks, that's what we're looking for, right? ABC Bank, checking account, average balance, let's say $10,000. That's an example. ABC Bank, savings account, $10,000 average balance. And you can get your average balance from whether you get them sent to in the mail to you, your bank statements, or you can just go online. Obviously, if you have mobile banking or online banking, it should show you that average balance. If you can't find that, I would say ask your banker, wherever you're banking at, they should be able to get it for you. But average, we know your balances go up and down in your business. We understand that. But average balance. So hopefully that makes sense. If you have another bank, let's say it's XYZ Bank, CD, $20,000 average balance, that's what we're looking for. All of that, all your assets right there, cash assets. And then liabilities are very simple, right? Bank name, wherever the balance is. A lot of times we'll see this left blank also. Either somebody doesn't want to do the research to find that out, or they don't understand what this is asking, right? So again, get help, actually get somebody to help you fill this out with filling this out, but it's very important. Bank name, let's say in this example, XYZ Bank, balance is, I don't know, $20,000. Is really important, a monthly payment right here, because this is where we're going to see and these are the minimum monthly payments. Not necessarily, some people pay more than the minimum. Let's say it's a business credit card or even a business loan and you pay more than the minimum. We want the minimums only, right? Because this is how we start looking at, this is one of the things that we use for cash flow, right? If y'all remember in part one, we talked about debt service, right? Your debt service coverage ratio, we look at that. And part of that debt service coverage ratio is your annual debt. And we get that from the month, and by looking at your monthly payments, multiply them by 12, that's your annual debt. That's why this number is really important right here. Minimum too. So if you're counting what you're paying and you're paying more, you're actually hurting yourself from a debt service coverage ratio standpoint. Make sure you're putting the minimums down here. And we'll look at that. We may ask for statements too as well to confirm, but that's really important. Make sure you put all that down. Business credit card, business loans, business line of credit, whatever the minimums are. And then what's the collateral being used? Is it secured with real estate? Is it secured with equipment? Or is it unsecured? It may be completely unsecured. Like if it's a business credit card, there may not be any collateral to it. It's just unsecured. This is important for us because let's say, for instance, let's say you're saying, hey, you need to pull equity out of your commercial building. Let's say you own a commercial building and you're trying to get equity out of that and you're using that, obviously that commercial building has collateral, the real estate has collateral, but then we see there's a loan on that building. Somebody already has first lien position, which if you know anything about lenders, we typically are going to want first lien position, meaning that if something were to happen, we're the first ones to be able to have first claims to that asset so that we can pay ourselves back. As lenders, we typically don't want to be in second lien position. We're going to want to be in first lien, right, to minimize our risk. So we may say, if we see that down, we may say, man, you're going to have to refinance that. We're going to have to pay them off and then take a little equity out. That's why this is really important. That's one reason. So I'll go down to the next section. The next section is business financial information. And this is really and then you see most recent year in as of, so obviously we're in 2022 right now. So this would be, if you're just looking at regular calendar years, this would be most recent year in as of 12/31/2021, right? If you have a different, if you have fiscal year in, let's say your fiscal year ends at the end of September, then you would put 9/30/2021, right? September 30th, 2021, because that's when your last year ended. And those numbers are going to be based off from there. So let's use the first example, 12/31/2021. So this right here, income/expense, this is your income statement right here. So if you've already filed your 2021 tax returns, I should be able to see that on your tax returns, and you should be able to pull that as a business owner. You should be able to pull that information. It should be readily available for you, and you just look at the tax returns or look at your year-end profit and loss statement, and you should be able to take, hey, what was my annual revenues? What was my annual gross sales? And just put that number right there. What was my depreciation expense? Put that number there. What was my interest expense? You should be able to just pull it. If you don't have financial statements, or if you have not filed tax returns, you're not going to be able to fill this out, right? So this is where it's really important to have that tax advisor, tax accountant, CPA to be able to help. Now, I'll explain here in a little bit why we like to see these line item out, depreciation expense and interest expense. Let me go ahead and explain it now since we're there. But after that, net profit. So depreciation expense, if you have them line item out either in your tax returns or financial statements, we can actually, from a cash flow perspective, we can actually take the depreciation expense and interest expense and add that back to your net income or net profit number to try to get you to try to see if we can entertain your loan request, right? But if you have, this is where it's important to have a good tax advisor and CPA. If you have somebody that is not well versed in business taxes, they may not understand to be able to do that. So therefore, they're going to put all your expenses just all together. They're not going to line item depreciation expense and interest expense out. And if it's in all other expenses, we can't add that back to your net income number, to cash flow, your loan request to try to see if we can get your deal approved from a capacity standpoint. That's probably a whole different conversation, right? Another class. But it's really important. That's why we're looking at that. That's why that's important. Just know that that's important, I would say. And make sure you talk to your tax accountant and tax advisor about that. So that's your profit and loss statement and balance. Your profit and loss statement right here, the income and expense, where these numbers are going to come from. And this would be your year-end profit and loss statement. So if you remember from part one, we're going to ask for that. We're going to ask for your last year's tax returns, right? And last year's financial statements, your last year profit and loss statement. And we're going to see that. So if those numbers, the numbers you're putting here, if they're different, way off, that's not a good look, right? What numbers are we supposed to believe? So this is where it's really important to make sure you're accurate. Now let's go down to the next section. This is your balance sheet right here, the assets and liabilities and net worth. So your balance sheet should be showing that. Now sometimes, and I'm not going to get into all of it, but sometimes you can find this on your tax returns, the balance sheet, depending on what type of entity that you file as. You may not have a balance sheet on tax returns. So you definitely need to have a separate balance sheet from your financial statements. You should anyway, but that's where you would get this information from. And the same thing is as of year end, right? In that example we talked about, 12/31/2021. So assets, so cash, and this is all business bank accounts. Out of all business bank accounts, whether it be a checking account, savings account, CD, out of all banks, as of 12/31/2021, what was the balance? What was the balance? What was the balance? Your cash balance. Again, it should be on your balance sheet. And if you have the balance sheet, you can just pull the numbers and put them on there. Accounts receivable, same thing. Just be able to pull from the balance sheet and put the number on there. And then any other assets that are not cash or accounts receivable. What was that? Like if you own equipment, if you own the building, right? Those are other assets. And then obviously you do the total. Same thing for the liabilities. Remember, and this section may not match this section because remember, this is as of 12/31/2021 or as of last year. This may be a little different. So current liabilities or all other liabilities, if you don't understand exactly the difference in those, just put it under all other liabilities and then do the total, right? We know what current liabilities are, long-term liabilities are. You may not know that. If you don't know it, you can always talk to a mentor or tax advisor or CPA. Your tax advisor and CPA can help. And then what's your total net worth, right? We hope, all of us hope that that's positive. So assets is everything that you own from the business, and then we're from the business side. Liability is everything that you owe from the business side, and then your net worth is what's left over, right? So hopefully you own more than you all striving for. Again, this first page too. This is all, and there's 3 pages to the application, but this page is all the questions and everything. All the information pertains to your business only. It does not pertain to you personally. I'll make sure that's clear. So next section, what's your current year-to-date gross sales? So that would be up to this point, since we're in 2022, from January, 1st, 2022 to, I would say, because August hadn't ended yet, we just started. So I would say till July 31st, 2022, what was your annual gross sales? Or what was your gross sales, your year-to-date? That's what number we're looking for right there. Has the company incurred a loss in any of the last 3 years? Yes or no? That's important because just from a structure standpoint and understanding your business, and again, we talked about it in part one. If you had a loss, what happened? Maybe we can just try to explain it away, but we need the details of actually what happened. If you didn't, then obviously you just check no and keep moving. And does the company have any delinquent state or federal taxes owed? Yes or no? This is important too as well, because if you owe back taxes, it's going to be very challenging for your loan to get done. Because the IRS or any state tax or the IRS or federal taxes or whatever, the state taxes, they're going to be firstly on everything. So lenders are going to be very reluctant to do anything until you've gotten that taken care of. And then there's going to be questions actually, what happened? Why did that happen? Is the company for sale or under an agreement that would change the ownership of the business? So if you're going to sell your company, I would have to ask you, why are you asking for a business loan, right? If you're selling the company. If you have an ownership change, that is a big deal too as well, because typically it depends on the lender, but most lenders, whomever has 20% or more ownership in the business, typically has to be on the loan, right? Has to be guaranteeing the loan. So this is why this is important. So if you have ownership change, that can change up some stuff. So that needs to be taken care of really before you are doing a loan request or asking for a loan or a line of credit. And there's going to be questions. Why did you change ownership, right? So just be ready to answer those questions. List other business ownership interests of the borrower. Like, do you have any other businesses that you're owner of? That needs to be listed. We're asking that because there may be other income involved that can help with the complete loan package. Also, we're going to ask for tax returns for each one of those businesses and financial statements. And then information about your customers. This helps us to know, what type of business, who are you dealing with, like what type of clients you're dealing with, whether they're local, national, international, and maybe all of them. Then you would just put that in. You would just circle those, actually, local, national, international, and then you put who your target customers are right here. A lot of people miss this because it's really tricky, but who are your target customers? And then these questions right here, and do you issue or redeem money orders? Do you issue redeem traveler's checks? Do you provide or sell prepaid access? Do you offer foreign currency, for clients? Do you exchange that for clients? We're trying to figure out if you're a money service business, and typically, I would say not all lenders, but if you're a money service business, usually a lot of times it may not be those type of industry or that type of industry that may not want to change, right? Again, it depends on the lender, but that's where those questions are coming from. So hopefully I kind of went through that quite a bit of detail for the first page of the application. Hopefully that makes sense. Now, the second page of the application is really all about the owners, who's going to be guaranteeing the loan, owners, or who's going to be guaranteeing the loan. It doesn't always have to be, or sometimes it can be somebody other than the owner. Like if you have a spouse that's willing to guarantee, but they're not part of the business, then yeah, they can be on the loan. So let's say you have four people who are guaranteeing the loan, right? Um, you have three of them are owners, and the other one is a spouse. Then you're going to need two of these sheets because you can see there's only two spaces. You'll just need two of the second page of the application. So if you have two, let's say you have four owners, right? Then obviously check off joint credit. They would have to initial the applicant initial. It doesn't matter who the applicant is or who the co-applicant is either. I would say typically who has the majority ownership is probably going to be the applicant, but it typically doesn't matter. So all this is your personal information right here, which whoever is actually going to be guaranteeing the loan. This is all their personal information. You know, Mr. or Mrs. or Miss. You know, ownership percentage, name, personal name, and then title that you call yourself, and then your personal address, and then obviously all your detailed information here. You know, are you a U.S. citizen, U.S. resident alien? I don't like that terminology personally. I'd rather say permanent resident. But that's what that's talking about, yes or no. And the reason why that question is there is there are some lenders who actually do loans for non-residents, right? But typically a bank is not going to. Typically SBA does not do loans for non-residents. There's certain situations, special situations, but there are lenders out there that do business loans for non-residents. They are out there. And I know I have a couple of contacts that have contacts, right, that can do loans for non-residents. Monthly wages. Now, these are your personal wages. So if you have W-2 income, like if you have a full-time job, part-time job outside of the business, then this would be that income, what the monthly income is. Obviously, we'd be able to verify that from paycheck stubs or recent paycheck stubs and then your W-2. If you are paying yourself from your business, right, as a W-2 employee, you're paying yourself as an employee, then you need to put the monthly wages down, right? So you should have paycheck stubs and W-2s that prove that. But if you don't have any employee income, like you're not W-2, if you don't have a full-time job, part-time job, only income you have is really just from the business income, whatever's left over, right? And it's not W-2 or employee income, then you wouldn't put anything there because this is all personal. Monthly housing payment, whatever your monthly mortgage payment is. If you don't have a mortgage, if you're just renting, whatever that monthly rent payment is. And then monthly other income, I would say this could be if you have another business that provides you other income, or if you have disability income, or if you have retirement income, you put that income there. If it's all the above, right? Then you need to specify all those sources. Hey, this is from, I would say this amount is, the specific amount. This amount is from retirement income. This amount is from Social Security income, and this amount is from my other business income. And I would just put the name of the business if you can. And you'll always be able to explain this to them. Assets. This is personal assets, cash on hand or in the banks, personally, right? All your personal checking accounts, savings accounts, CDs, money markets, out of all banks. What is that amount right now, approximately? IRA retirement accounts, 401k, 403b, 457, individual retirement account. What is that balance approximately? And then marketable securities and non-marketable securities would be any individual stocks, bonds, mutual funds, exchange traded funds, any securities that you have outside of a retirement account. Those numbers go there. Typically, people are not going to have this. Usually, it just applies for their business. So that's usually left blank. Residence, that's if you own a home. Even if you have a mortgage on there, So if you own your home, how much do you think you could sell the house for right now, as this application, as doing this application? How much do you think you could sell it for, and you put that amount in there? Because this is your assets, remember? And then any other real estate owned, if anything other than your primary residence, like you own land, if you own other investment residential properties, or even an investment commercial property that's in your personal name. I've seen that before. If it's in your personal name, that's other real estate that's owned personally. And then any other assets, like if you uh, furniture, any personal items, or whatever other assets that are not included into these numbers. And then you get the total, of course. And the liability is very simple. Residential, auto loans, all auto loans under your name, right? That you're responsible for. Even if you actually have a joint, let's say it's a wife and a husband, have a joint car, the wife's not actually, or the husband's not going to be on the loan request, not going to be guaranteeing the loan. He's not a part of the ownership of the business either, but her name is actually, but the wife's name is included on the husband's car loan. It's a joint that needs to go there. You're responsible for it, right? If something were to happen, they're going to come after you to get paid back if it's on your credit. That needs to go there. Residential mortgage, how much do you owe? And any other mortgages. Credit card balances, total credit cards, your personal credit cards, any unpaid income tax. That's a big deal. You'll see that again when we get to the personal financial statement, which we're almost there now. Because if you owe back taxes, it's going to make it very challenging. You got to pay that back first. And any other debt that's not included here. Student loans, that may go here. And these are the balances right here for assets and liabilities, total liabilities. Same thing for each owner. So each owner or each person that's going to be guaranteeing the loan, we want the exact same information, right? Now, if it's that one example, wife and husband, let's say on these, it's just wife and husband, and they have the same debt, don't count the debt twice, right? Just once. You want to double count it, and don't count the assets twice either. And then just kind of down here, so typically what I'll see is, let's say it's, there's 4 owners. You can see how small this line is, but I would have all 4 of them actually sign right here. Sometimes you have to sign 2 here and then 2 below, and then their titles and then date. We want everybody's signature that can make a decision about the loan request. And then they need to all 4 sign here and date. So that's the third page right here. That's the end of the second page. The third page is really just a disclosure statement to all commercial loan applicants. Basically, why we're asking the questions that we're asking, to identify and verify each person who opens an account or who asks for a loan request or line of credit request. If you get an appraisal done, then you'll probably be paying for that appraisal, and then you can get that appraisal actually given to you, either by mail or electronically. And then obviously, if for some reason there's an equal credit opportunity notice, and if for some reason the loan request did not go through, there's an adverse action notice, so like letters that are sent out and you're notified. That's what that's talking about. This is really just for your disclosure to be able to keep as a loan applicant. So hopefully that helps on the application. And this is the personal financial statement right here. I know I'm going pretty fast, but I know we got limited time. So if you remember correctly, the last, with the application, the second page of the application, that last part, or the part that you were filling out, this looks very similar right here for the personal part, that second page. So there's a little bit more detail here, you can see, but it's very, very similar. So if I go back to here, I'll go back to it. So you can see right here, very similar. So a lot of numbers should be very similar. There may be a little bit difference as far as the total, because there's a couple of different things that are on here, like this right here. Net cash value of life insurance. The net cash value, that's if you have like whole life insurance, like permanent life insurance, not term. Permanent life insurance gains cash value. So whatever that cash value is, that's what we want to know. So let's say for instance the uh, base amount of the life insurance policy is 300,000, but you only have about 5,000 in cash value. You put 5,000 right here. I'm not going to go on all the details on this because, like I said, I think we have limited time. But you can see the difference right here. Business assets. This is a personal financial statement, but we want to see the business assets too. So let's say if you sold your business, all the equipment, everything, name, everything, how much do you think you can get for that? That's the number we're looking for there. And so you can see there's all these schedules for each one. I'm not going to go into complete detail, but as an example, cash, right? This is personal. On all your personal accounts, with all the different banks that you have, with all the different types of accounts, what is that amount? And when you go to the schedule, which will be starting on page 2, the schedule it breaks down like, hey, what's the style of account? Is this a joint account? Is this you and your spouse? What's the name of the financial institution? What's the balance? What's the type of account? Is it checking, savings, CD, money market? What's the account number? And is it pledged? In other words, is it already being used as collateral? Quite a bit of detail, but just make sure, again, you get the help that you need to be able to fill this out, either from a mentor or tax advisor or CPA or tax accountant, or both if you can't fill this out correctly, if you can't do it yourself correctly. So total assets and then liabilities, very similar. Again, I'm not going to go into detail. I think y'all can read. Schedule of contingent liabilities. These would be liabilities that, like, let's say you co-sign for a spouse or you co-sign for one of your children for a car loan or something like that. You're responsible for it because it's on your credit. That needs to go there. What that amount is and who the lender is and what the collateral is. Because we're going to include that in your debt service. It's going to be on your credit report. So we're going to see it. Even if they're paying for it. If they pay for it and it's on your credit report, right? But something happens, for some reason that loan goes goes bad, they're going to come after you for the money, right? Because it's on your credit report. You're responsible for it. So this section right here, and I'll probably spend about a couple of minutes actually on this section. This section right here is very important. A lot of people leave this blank. This is where we're trying to determine your personal debt service too. So on the business, if you remember the business application, the first page, we're kind of looking at business debt service there. And then here we're looking at your personal debt service. If you remember part 1 from last week, to see if you had the capacity to afford the loan and line of credit request. So we can see it very quickly from the application and from the personal financial statement. So previous year, obviously we're in 2022 right now. So that'd be for 2021. What was your salary and wages last year? And current year, that would be up to now. How much have you made? W-2 income. Spouse, same thing. Even if your spouse is not on the loan, we want to know, right? Because it's part of the household. Commission or anything like that, if you get commissions and bonuses, any interest dividends, like you get interest, like from your checking accounts, savings accounts, or money markets, CDs. What was that for 2021? What is it the current year? And then any business partner income. So let's say, for instance, you don't have any W-2 income. All your income is just from the business, right? That would go here. What is that net income number? And then any other income or gains, like you have Social Security, retirement, Social Security income, retirement income, or from another business too as well. You can put that there and then add it all up. For the previous year, same thing for the current year. And then for the uses of cash, if you had income taxes last year, if you paid income taxes, we need to know what that amount is. And then currently, have you paid anything? And maybe zero. If you got a tax refund, there's not going to be anything right there, right? Mortgage payments. What is the annual mortgage payment? What was the annual mortgage payment for last year? So if you bought your house this year, right, there's not going to be anything there because you just bought it this year. So whatever. So let's say, for instance, you bought it in February, right, and we're in August. So just from February to August, would be your whatever your payments are monthly times. I guess that would be 6. What is that amount? But you got to do the same thing for well, not the same thing for everything, but we have to take that in consideration when we're calculating cash flow. Loan payments, that would be any other loan payments other than the real estate, right? Other than your mortgage. If you have rent payments, you can put it in all other expenses, or you just put it in personal expenses, but that needs to be calculated. You wouldn't put it in mortgage payments because it's not a mortgage. And then you get the totals on all of them, right? And we'll see numbers here. So remember, the debt service is your annual net income divided by your annual debt. We're going to take this number here, look at your previous year. So if we're looking at previous year annual net income, we're looking at previous year annual income, previous year annual debt, and we'll take that number and divide it. But we kind of look very quick. Now, there's other things that we look at too as well, because there's personal living expenses is not completely included in all this, but it's a quick look that we can kind of see like, yeah, this may be a good deal just from a capacity standpoint, or man, it's gonna be challenging. I don't think they're gonna be able to. I don't think they're gonna be able to afford this debt, right? But it's really quick that we can look at it. And obviously, you sign if your spouse is gonna be on the loan or line of credit request, they need to sign. If they're not gonna be on there, they don't need to sign. So that's pretty much the end of it. And all the sections I already explained go into details of each one of these, right? Um, but that's in a nutshell the business credit application and the personal financial statement. I know it's a lot to cover.
Oh
Um,
my goodness, it was amazing. Thank you for that presentation. I couldn't stop taking notes, and there's so much I want to ask you. I know we're on limited time,
yes,
so let's start the Q&A section now. You guys go ahead and drop your questions in the chat, and while we kind of get some questions, like I said, Tim, there's one, well, two. Why are people using fax machines still? I don't get it either. I don't understand. Maybe Tim has our answer. Um, okay, so Tim, what's the suggested amount that I should put down on a business loan? Is there like a standard percentage, or is it sort of conditional to the amount that you're trying to borrow?
well, that's a good question. It really depends on what you need. So, as the business owner, you need to figure out what you need, right? And so, if you don't know that, this is where your mentors can actually help you. So, let's say, for instance, hey, I need money for working capital, right? For payroll. You need to figure out how much you need. I need 30,000 to be able to pay people for 6 months, right? To be able to pay my employees for 6 months. You need to determine what that amount is before you come to a lender. It's a lot different. The commercial lending side is a lot different than the consumer loan side, where a lot of consumer, you can do like pre-approvals, right? How much can I get pre-approved? It's not really like that on the commercial side. It's like you have to do your homework as a business owner and figure out what your need is and what you're using the money for. And that allows us to be like, okay, I can understand now the structure of the deal. Let me try to see, let's try to put this loan structure together. So hopefully that answers your question. It
Yeah,
really depends. It depends on the business owner what they need.
right, exactly. And I figured it was conditional, but you never know until you ask. And speaking
Yeah.
of asking, we do have a question in the chat. Tim, if I leave something blank or don't give sufficient information in the form, will someone contact me or will my application be invalid? It's a
It
great question.
depends. It really depends on the lender. Um, I'd like the answers that somebody would actually reach out to you and be like, hey, what's going on? Right. I would say a good lender would reach out to you and be like, um, hey, Mr. or Miss Customer, it looks like I'm looking at your application. I'm having a little bit hard time understanding there's a there's a space that's been left blank right here. I need that information filled out, and they may ask more qualifying questions, right, to be able to help jog your memory to help you be able to fill it out. But there are some lenders, right? If you don't have a complete application, they may look at it and be like, and I don't think they should do this, but I know it happens. This person may not know exactly what they're doing, so they may just push your application aside. That's why it's really important to have that mentor or have that tax advisor or CPA or have that relationship with your lender where you can just pick up the phone, right? And say, hey man, Or, hey, ma'am, I'm filling out the application. I don't understand this question. I don't know exactly what to put here. They can't tell you exactly what to put, but they can at least explain to you about the question. And maybe if you don't understand it, maybe you can now you have a person that you can go to, a resource you can go to help you with answering that question.
Oh my gosh. Now, Tim, I'm going to reevaluate my entire like financial posse that I have because it's good to have these folks in your corner when you're making
Yes,
decisions like this. And it's so
yes,
vital, as some people will learn the hard way. It is
yes,
really vital who you
yes,
get your mentorship and that financial advice from.
yes,
Okay. So if I was to come to you, Tim, and I'm like, look, I want a business loan. I have the best idea ever for this company I want to start, this product, but my personal credit's not the greatest. So, are you going to have to look at personal credit when it comes to a business loan, or is that not a factor?
yes. It's a huge factor. It's one of the five C's. I know Maria, probably 3 weeks ago, talked about personal credit too from Live Fund. It's a big factor. And so I would say if your credit is very challenged, we first need to have that conversation like, why do you think it's challenged? Because sometimes people think their credit is challenged, it's not. But why do you think it's challenged? What's on your credit? Because it's not just about credit score, it's about what's on there or the lack of what's on there. Right. And so we have to have that detailed conversation of really what's on there. But then like if it's very challenging, I would say you're gonna have to really work on your credit before maybe going through a bank. Maybe while you're working on your credit, you can go through somebody like a CDFI or an alternative lender, community development financial institution like a Live Fund or a People Fund or William and Junior CDC. There's a lot of, I mean, there's hundreds of different CDFIs out there and alternative lenders. So it may be where maybe they can at least help you out and where you are right now, right, while you're working on your credit. But yeah, your credit's a factor because if you have charge-offs, slow pays, collection items currently, right, that shows that you don't understand how to handle debt. And so, as the lender, we want to make sure we get paid back and pay back on time. And we don't want to be on that list and not getting paid back and not getting paid back on time.
Oh my goodness, yes, that's not that's not what no. And there is hope. I think folks kind of look at that and go, "Well, gosh, my personal credit isn't the greatest and, there goes my dream of being a business owner or starting up a business," and that's just simply not true. And it's great to know that there is hope out there in that case.
Yes,
Oh my goodness. Thank you, Tim, so much. You are a wealth of knowledge. I gained so much. In fact, I'm going to probably hit you up on email and ask my questions myself
that's
at
cool.
this point. Thank you all for joining us today. Just remember the replay of this session will be up on Sarah National's YouTube channel by next Wednesday. The link to the website and the YouTube channel is posted in the chat, as well as Tim's information, which is awesome. You could reach out. And Sarah will be back with another session. Don't forget, a week from today, same time, same place, same valuable information. And thank you, folks, so much. We will see you next time.